Hello guys, welcome again to another BTC daily update. I hope you are doing great today. In today's BTC daily update, we will be discussing as usual the BTC daily time frame, the BTC 4-hour time frame, and the BTC 1-hour time frame. In addition, I'll be adding the weekly time frame because it's very important to be tracking it right now. So stick around to the end of the video. It will get very informational. As always, like, share, and subscribe. It means a lot if you can help the channel grow. With that being said, let's jump straight into the charts and see what's happening with BTC. I am going to start first with the daily time frame because the daily is the easiest right now to analyze. So if you remember, last time I left you was, I think that was last Friday or last Saturday. So we were around this area, and I was telling you that we were at the point where Bitcoin is, I don't see Bitcoin going to 44K or 50K or 52K or whatever. I see it going to that 60 to 61.2K region, which is that daily fair value gap, which is the heartland of the channel, as you can see. And then after that, we see what happens. So that's what the daily time frame was suggesting, and that's what happened. So we climbed towards that area, and actually we surpassed that area, which is also a very good sign. And the daily upside isn't over yet. So if you remember, I told you that the daily time frame analysis usually translates to around 7 to 10 days, 5 to 10 days, right? So it hasn't been that still, right? So we started to have the move here. So I would say we still have a decent, I would say we still have a decent amount here on the daily time frame for upside. Okay, now will that happen? Will we get the upside to the moon? It's very hard to say, obviously, but what I can tell you for sure is a couple of things. So the first thing that we're gonna focus on is obviously that we don't want consolidation and bearish wicks and bearish candle closes on the daily. So that's the first thing that we want to we don't want this. Okay, this scenario, we don't really want them. Okay, what we would like is obviously more upside, more bullish candles, and we would like consecutive daily closes which are higher than the previous one. That's what we want, and obviously that will allow the EMAs to cross bullish again, and then we're gonna be around 70% out of the woods on the daily at least. And I'm saying 70% because after that we need a retest of the EMAs. So if we get so just to give you an example, something that looks like this, all right? So this, we climbed above, we did a bearish consolidation, which is not good, but we did retest the EMAs, we held the EMAs, and then we continued upside to a rally to the upside. All right, so that is what we want in the daily time frame in order to see more upside. Personally speaking, if we do get more upside, if we do get more bullish momentum, I don't think this will surpass the top of the channel. I think this could most likely just go to the top of the channel once more and just keep chip chopping until we get a decisive breakup. Now obviously when we go to the top of the channel, we have to analyze again and to check again. Hopefully the 4-hour time frames and the daily time frames will give us an indication if we've topped out or not. As of now, the daily is still looking good. It still has juice left in it. We are technically still in a bearish on the daily because our EMAs haven't crossed bullish yet. But like I said, we need a couple of days of data, and this will be more clear for us. Obviously, if we start to get consolidations similar to this on the daily closes over the next couple of days, that's not going to be a good sign at all, and most likely we're going to probably head towards the bottom of the channel once more. Now, do I think personally that will we go this or will we go down? Honestly, it's very hard to say, okay? But what I can tell you, in my humble opinion, is that there's a very high chance that we have to retest the lows here. And the reason being, I'm not the super lows, by the way, at least the lows around here. And the reason being is that we left a huge CME gap on CME, basically. All right, so we left a huge gap. It's right there in front of you. You can see it. The gap is between, it's a very big gap. It's between 60 and 57.8, and you remember there is a deviation between the CME gap and the CME chart and the perps chart. So this is a very huge gap. Now I don't think that we're gonna do this from where we are right now, so I don't think we fill it like that, but I do think that this gap needs to be filled. All right, Hopefully after a few days of data we get more information on whether this will be the case or not. But yeah, even if we do fill the gap, by the way, I don't think it's the end of the world. You know, like I told you already, guys, I don't think this is the end of the world. The end of the world only will happen for me if we lose the weekly EMAs and we cross bearish on them and we start rejecting on them. With that being said, we're gonna jump on the weekly because we did have last week's chart close, which was a very, very good close in my personal opinion. We did close below the EMAs. It was expected. It's not like we talked about this in the previous BTC daily update. We did say that most likely we will see some couple of daily weekly closes under the EMAs, something similar to this. But as long as we don't lose them and we cross bearish, everything should be Gucci for the bull run. With that being said, the first weekly close after that bearish weekly candle came in. It was a nice close. It was around 61.3. Granted, it was below the EMAs. And currently, we're sitting slightly above the EMAs, around 63K, okay? And this 63K level, or currently where we are at the weekly, is very, very important for me, at least in an analysis type of situation, because this weekly close will give us a lot of information. If we close bullish on this weekly close and we close above the EMAs, like I told you guys, if you're a bull and you want, you know, Bitcoin to go to the moon from here, what you would need to see is consecutive weekly closes above the EMAs, not below it. All right, so we got the first one, which was below. The second one is still TBD, so we don't really know where this is going to close. If we do go to fill that CME gap at 57 by the end of the week, and you know, there is also a liquidity zone here around 58K. So if we do go there, then it's gonna start looking something similar to this. But like I said, no bearish cross on the 1830 EMAs is fine. Okay, we can consolidate bearishly under the EMAs for quite some time, as you can see here, and it still is nothing. Okay, what we would like to see as people who are pro bull run basically is this. We want to see a rally. We still haven't seen a rally. Rally similar to this also is very good. A rally similar to this is also very good. So yeah, that is it for the weekly time frame. The weekly looking good, at least on that first weekly close. 4-hour time frame now. On the 4-hour time frame, I think last time I left you guys, we were around this area. And I was telling you that the 4-hour was bearish and most likely we should go test around 56K before any type of move to the upside. And we did actually, which is basically the trend line. I told you there was a trend line at the bottom. You could have called this a wedge or a channel, but we should retest that trend line, and we did. We went to around 56.5, and then after that 56.5, we had a massive pump towards, you know, 63K over the next couple of days. Now, what's the 4-hour looking like right now? The 4-hour right now is not looking like to the moon type of structure. Okay, the 4-hour most likely over the course of the next 24 to 48 hours, we will most likely have a retracement, and the retracement most likely should go towards somewhere around this area. We have two zones. It could be a minor retracement or a major retracement. If it's a minor retracement, it's probably going towards that area here between 61.8 and 61.4. If it's a major retracement, it's a big retracement, it's probably going towards this area right here, which is between 65 and 59.8. Okay, as long as we hold the retracement on the 4-hour, I think we should see again a little bit more upside. Granted, we are at resistance, so this is not a place where you should be longing, by the way. But yeah, if we do hold the retracement on the 4-hour, then we could see potentially more upside to on the 4-hour time frame. But I have to analyze it again. If we lose the 4-hour EMAs, so we lose this area, which is that 65 to 49.5 region, then that's a no. That's not a good sign, obviously. All right. As of now, 4-hour I think is retracement mode. And 1-hour, obviously, because it correlates to the 4-hour, I also think it's a retracement mode towards at least either minor area here or major area here. And that is it for today's BTC update, guys. I hope you enjoyed it. As always, like, share, and subscribe. It means a lot if you can help the channel grow. And that was it. I will see you again next time. Bye-bye, guys.